Happy Monday, or maybe if we're looking at the corn market or the headlines we've got loaded up, I'll say it is Monday because we've got another down day in the corn market. Welcome to ATI Pro Media. We are powered by Advanced Trading. We're going to jump right in the show. We've got Tommy. He's working hard at RFD TV. Make sure to tune in. So it's Brady and Connor day today. We're going to bring you the headlines, bring you the quotes, and talk a little bit about what we saw Friday with the USDA report recap and what we can expect going forward. So, Joe, bring him in. We're going to bring in Brady, and he can run us down some of these quotes and see what the markets are doing. How are we doing, Brady?
Doing good, Connor. Yeah, let's jump into LaSalle Street and walk through some of these numbers where
it.
these markets are at here. So we got corn, July corn down 2.5 at 394. Deese corn down 3 3/4 at 417, 416 3/4. When we jump over to beans, November beans down 5 cents, 10.99. They broke through that $11 barrier there. When we look at the wheat complex, where wheat is a shining light, up 7 cents in Chicago. KC up 4 cents, 3 to 4 cents. Jumping over to livestock, feeder cattle are down $2 to $2.50. Fat cattle down $1 to $1.45, depending on which contract you're looking at. Hogs mixed up front a little greener, up $1.20. Back months down 15 to 55 cents. Jumping over to Wall Street here. Let's look at some of the equities. We got the Dow up to 85, the S&P up 10 cents, the NASDAQ down 8, gold up 4. What else do we look at here? Bitcoin up 2,840. Got to throw Bitcoin in there. I think that's it here on the markets. A little snapshot of the markets.
Good deal. So looking at corn and soybeans, especially November, December futures month, we're looking at calendar year lows currently with soybeans breaking below, sitting at 10.99. We are below that $11 range, and corn looking at 4.15. Brady, talk about some weakness. And if you tuned in with us Friday, right? Thank you to that. We had a great crowd watching doing that. And they watched us have no news for almost 10 minutes where we saw the USDA being delayed, having technical issues and not getting the numbers. But then when we got the numbers, they didn't say if you were a bull in this market, they didn't say what you wanted them to, especially on the corn market.
Yeah, a lot of fun Friday watching the people watch the circus of the show. 1,100, viewers watching us at one point there. That's amazing, powerful. But yeah, and then watching nothing, absolutely. But on to the next thing here. Got a big weather week ahead of us, Connor, and we'll see what these markets want to do. But beans breaking $11. The low on Friday was, I think, right at 11, and breaking that psychological number of 11. That's doesn't seem like sentiment's changing. You got some slides for us here to jump through?
I do. Looking at, and just we'll kick off that. We're on slide 4 here, but you mentioned weather, and when we look at, we're talking weakness in my area, especially. We're dry, Brady. It's a very emotional, psychological time if we don't have much sold, and we're seeing potential for less yield as the rain comes. But pulling up GFS forecast, it's pretty non-threatening weather so far for the Corn Belt. Now, more rain is expected for the areas that got flooding. Right, that will probably be a big headline going forward. Is how much is taken out of production. That was not reflected on the acreage report. So if you wanted to be super bullish, that's going to be in the back of your head. How much can we see yield production drop based on that? But looking at a GFS, in my opinion, pretty non-threatening. What do you think?
Yeah, that wet getting wetter, and there's going to be pockets of dry everywhere across the country, but it just looks like the debate is, too much rain in spots, how many acres are damaged, and then, how many acres actually benefiting, in that between zone where they're getting ample rains. And just kind of going to be more questions and answers going forward, always up for debate on what the future holds and what it means for corn production. But right now the markets are saying we got the bushels and we're not worried about lack of supply out there.
Yeah, we are in the function of the market is we've got to find some demand. No flash sales this morning. We're not seeing it yet, but hopefully that's what we need is when we see these lower markets, we need to see the demand coming in. Hey, I got something for you outside of before we die. You and I know us. We're going to talk grains. We don't have Tommy here to talk outside markets, but I do got one headline for you.
Okay.
Roaring Kitty is back in the news, but it's not with GameStop stock. Uh, we need to have Ryan Fogel call in and talk about this. But Chewy, SEC filing, right? Chewy is a dog food, like direct to ship direct pet food supply company, and they just showed Roaring Kitty, aka Keith Gill, 6.6% stake. So I think it's safe to say, do we add Chewy to the meme stock group, right? The GameStop, the AMC. So interesting to see.
Yep. Yeah. What wasn't there also a little headline over the weekend about a lawsuit against Roaring Kitty with his involvement of GameStop as well? I think there was a headline, and Tommy talked about it last night on his live stream. Um, yeah, cats, dogs, stocks. Tommy G, the man, making some comments there.
I didn't see that, but it'd be interesting to see, right? As he how much trouble could he get in just posting pictures on Twitter and that seemingly influencing the stock? So interesting to see there.
Yeah.
But other headline I had before we jump into some more charts. Go next one. Let's talk John Deere. And so we've talked a lot about the layoffs that we've seen, right? A weaker commodity market, lower prices for farmers. That doesn't exactly equal big revenues for tractor suppliers, and we're seeing that with John Deere. They laid off. They just announced they're going to lay off 600 employees in 3 different locations, and then along those lines, they're looking at more layoffs for salaried employees come July. So, right when farmers are feeling the hurt, it's going to be reflected other places too. And we're seeing that with the tractor sales. We've talked a lot about that. And so more layoffs continue with John Deere.
Yeah. Those dollars, where they come from, where they go, these farm markets, they ripple through rural America and all of our ag communities. All of us are tied to how many jobs in America are related back to a bushel of grain or a bushel of, farm country. It's just amazing.
Right. And especially in you and I's area, quite a bit, right? Dodge City and Assumption, Illinois. That's our industries. Absolutely.
Yep.
But pop this one up. We had, let's jump into the grains. Funds, commitment of traders. No surprises given this weakness. We are in very short and record short territory. Let me pull that chart up. Here you go.
Yeah. Wild.
So,
yeah. Big short. So this is corn futures, COT managed money net position, right? They posted it 278 net short as of last Tuesday. So that's Connor, that's a couple days ahead of this report here. So that doesn't even take into the significant price drop we've seen on Friday, does it?
No. And so you could say, you could make the assumption that we're a little bit shorter than what the COT report reflected. But as you can see, we're kind of an uncharted water here. The only comparison we have is we're getting down to the 2020 levels, right? Which was the middle of COVID. And then also look at the rally we saw on the back of 2020. I'll preface that the rally in 2020, a lot of factors played into that maybe aren't on the table in 2024, but we did see a bullish June 30th report in 2020. They reduced corn acres significantly. We got the opposite in 2024. So if you're trying to compare years, right, past performance isn't indicative of future results. We know that. I think we got it scrolling at the bottom as our headline. But 2020, I don't know. It's not a fair comparison yet, even though it looks like there's potential there.
Yeah, it certainly feels like, the record net long and the record net short in fund positions, both of those, I believe, have been set over the last 5 or 6 years. So it just seems like we're breaking records left and right here. And I would not test that record corn short of 340. It'd be interesting to see what gets printed over the coming month here and how short funds want to get on this market. But I would not doubt them wanting to get much shorter than they currently are, even though we're sitting at a big short right now.
Right. Speaking of that market, we talked about weather. Keep in mind, 4th of July, Thursday, we're going to have markets closed. No night trade, hard open Friday. So it's going to be interesting to see that Friday trade. We were talking before the show. It feels like a Thanksgiving, right? That Friday are we going to see a whole lot of volume trade, or is it going to be a very quiet day in the market? Probably going to depend on some headlines and weather that we get leading up to it. But keep that in mind. Close Thursday, no night trade, hard open Friday.
Yep. Big week here. A lot of weather models here between Tuesday's close or Wednesday's close and Friday's reopen.
Right. What else here we go. let's do a little. I got a few charts for you, and
Okay.
it's really just looking at on the backs of Friday's report and how we could see the corn acres change, and then also looking at stocks. So as you can see, last year, huge corn acre, right? Huge, 94 million acres. We're back down to, I'm going to call it the mean, right? 91 and a half feels, it's still heavy if you look going back the next 10 years, but it's a little bit more in line with expectations. And the key was it was much higher than the March intentions report and what analysts thought we were going to see for corn acres.
Yeah. Yeah. It doesn't certainly doesn't look like we have less acres of those two main crops out there than we have the last 9-10 years there.
Right.
Looking at that graphic and those numbers, if you believe the numbers, Connor.
It's what we have to go with. And
Right.
some more. Here's the great thing is next week, right? I believe it's July 12th. Don't quote me on that. We'll get another USDA report. And I think on that one, right now we're still working off that trend line yield, 181 and a half. Are we going to see a reduction? We've never got above a 180 national yield. Records, 178 was last year. Are they going to leave that number unchanged? Is this flooding and dryness reduce it down a little bit? It's going to be interesting to see. So keep that in mind. Keep that in the back of your head. Next week, another USDA report. And so I have a quote for you. I didn't have a chart, but looking at stocks, right? We saw corn acres increase. That was probably the big headline, but we saw corn stocks jump up as well. And so corn stalks in all positions on June 1st totaled 4.99 billion bushels, up 22% from June 1st of 23. And of the total stocks, 3 billion are stored on farms, 37% higher than a year ago today. So 37% more on farm old crop than we saw a year ago.
Store and ignore, I guess, right? That seems to be the theme, man. Where those stocks are. Very interesting stat, Connor.
Yeah. And so we'll see. We'll see where we're going to go. Right. It's a tough conversation where if you still have some old crop, we haven't sold new crop. Right. That's kind of the double long and wrong type of thing. So did not work out. Right. 22, having some old crop, not selling new crop worked out. Markets are cyclical, and keep that in mind.
Maybe they threw it in the bin and got a nice hedge in place, and we're just capturing carry, though, Connor. Capturing carry and capturing stronger basis, been managing this volatility. That's what I'm going with. How those 3 million bushels in on-farm storage are being stored.
That sounds great to me, because that's a conversation you and I talk a lot about it when we get into these bigger carry markets, right? The balance sheet suddenly gets a lot more burdensome. We need to start having those conversations of how can you capture carry with your bin storage? How can you manage basis, right? Pulling all the extra pennies we can. And then on the flip side, should we be talking about carries when interest rates, if we're paying X amount on an operating note, right? Does it make sense to convert that to cash quicker, right? And so if you ever want to talk through that, give us a call anytime, ATI, or send us an email as well, right? I love talking the merchandising side, how we can really pull the pennies, pull the pennies out of the market looking at these carriers.
Yeah, and that's what those, our commercial brokerage team at Advanced Trading, that's what they're doing every day, right? Is looking at that with their customers as what makes sense and how should you be managing basis and managing carry and where should your positions be. Good stuff. And we get them on every once in a while to do merchandiser magic shows on the ATI premium content. It's good stuff. Things to be looking at.
Those are my favorite ATI Pro Media Premium. I love hearing those. So
yeah, they are.
Soybean acres, right?
Okay.
Same thing along corn. I'm going to cough one more time. Take it over, Brady.
Okay, you bet. We got soybean acres here. Looking at that chart, planted versus harvested, very much, kind of mean, similar deal. The low print there, 76 million acres in 2019, a high print of 90.2 back in 2017, right there in the middle at 86.1. So kind of, you can argue one way or another there, but in the grand scheme of things, it comes down to raising the bushels, producing the crop, and do we have the demand to reduce the supplies, or is the supply growing or is it shrinking? Right.
And here's another fun stat. We mentioned it on Friday's show, but soybean plantings came in below the average trade guess for 10 years in a row, right? So if the trade thinks it was here, 10 years in a row, we have been below that number. Unbelievable. Just an unbelievable run. 10 years in a row, and we've been below the average trade guess.
That's wild. That's a crazy stat.
Yeah. So I think with that, markets are still moving. We're sitting on the lows on corn, but I don't think if we have any questions or anything, but if not, we can wrap it up. Make sure to tune in. Tommy's down in Nashville. He's hosting RFD TV. I think I might be on with him later. Make sure to tune into that. And I do have to thank Tom. Go ahead.
I had a couple good premium, talking about ATI Pro Media premium content. Had a great premium over the weekend with our PJ Quaid from RJO talking about and breaking down, what Friday's report, a little more detail, good stuff there. And then this morning, I believe Tommy had Mick on talking weather and the impact over the coming week. Big week of weather here over with, a couple of days not trading and some, big dynamic weather. July is one of the biggest weather months for the corn crop out there. But yeah, all four wrapping it up here and moving on with our day and seeing what the rest of the day brings.
Yeah, we'll see what it brings. Short trading week because of the 4th of July, but seeing a lot, still some more weakness in corn. We'll see what conditions bring this afternoon. That'll probably be at least a talking point of the premium today. We're still lining that up, and then we'll talk about it. We'll touch on it tomorrow. So with that, any other comments, Brady? We'll get out of here.
I think let's get to work.
All right, have a good one.
See you, Connor.
Thanks for joining us. We're here every day, 9 a.m. Central. Don't forget to like and subscribe. We'll see you next time.